And there you have it, the closing bell of the New York Stock Exchange, ending another trading day. The Dow closed the day down about 215 points.
And the S&P and NASDAQ also both ended the day relatively flat. Of course, a major driver of the markets is the record high inflation rate. The Fed has raised interest rates to try and ease rising prices, but that is pushing some prospective home buyers out of the market. Joining us now is Jeanna Smialek. She is a Federal Reserve and economy reporter for the New York Times. Welcome to you, Jeanna. So you wrote about this, and you say in the article that you co-wrote for the Times that the rate hike has forced some first-time home buyers to keep renting because they simply can't afford mortgage costs. And you point out that could actually contribute to inflation. Why is that?
Right. So rental costs are the primarily important housing number when it comes to the way we calculate inflation in America. So we do all of our housing estimates basically based on how much rent's rising. So the issue here is that we just don't have enough apartments to go around. We are seeing really strong rent increases because of that. And as we see more people sort of stay in that rental pipeline as opposed to moving into the market for owned housing, what we're seeing is a sort of contribution to that really, really strong demand for apartments and rented housing. And that's helping to keep rents higher. And as that happens, obviously, it's helping to push overall inflation up. And so it's a really tricky problem if you're the Federal Reserve. I don't think the solution here is not to raise rates because clearly inflation is very high, but there is this short-term issue where you're accidentally kind of potentially pushing inflation a little bit higher along this channel as you do those rate increases.
Yeah, and as we're talking about these increases, today's inflation report showed rent is up 0.8% month over month. It doesn't sound very much, but it's actually the largest monthly increase since 1986. What needs to happen for the rental market specifically to cool down?
If you talk to most housing economists, they will tell you that rents and wage growth track very closely together. So what we've been seeing recently is pretty strong wage growth, although it's getting eaten up, obviously, by these big price increases. And it's unlikely that so long as we're seeing that sort of high wage growth before accounting for inflation, that you're going to see a big slowdown in rents. Because for now, people have decent savings, they're getting paid a little bit more, they're working some more hours, they're getting better jobs, and they're able to sort of sustain those higher rents. What could change is if people move back in with parents, if we see people moving in with roommates because their economic situation has gotten tough enough, they just can't afford these apartments on their own. And that might allow sort of supply and demand in the rental market to come back into balance.
So that's the rental market. But given the impact of the rate hike on the housing market generally, does the Fed need to course correct here?
I think the Fed obviously feels that it needs to get inflation under control. And one of the ways it does that is by sort of cooling off demand. And so the idea is you cool off the housing market, rate increases sort of, obviously make it much harder to buy houses. That has a bunch of knock-on effects outside of the rental market. So what you see is with less construction happening, there's less demand for lumber, for example. There's less demand for labor to build those houses. And that sort of filters out, that decline in demand filters out throughout the entire economy and helps prices to come down. And like I said, if the job market weakens, if wage growth slows, eventually you would expect rents to also fade. And so I think the upshot here is not that the Fed needs to course correct, but the process of bringing inflation down and cooling demand off might be sort of more start and stop, more painful, more protracted than we would hope.
It's such a complicated picture. So many factors interconnected as we see here. Jeanna Smialek. Jeanna, thanks so much for your insight. Really appreciate it.
Thanks for having me.